It's an independent than the US, and investors will be off for holiday breaks, so market liquidity will be low today. But that doesn't necessarily mean that market volatility will be low as well. Investors are still waiting for the US, Northrop payroll report. The UK will head to the polls today for snap election, and France will have its final run of voting this Sunday. So there are still a couple of important events of the calendar that could still move for markets. Especially after the sharp decline in the US dollar on the back of the weak year business data, which signaled a larger probability for rate cut in the coming months. So that caused some nice movements in gold, the euro dollar and pound dollar. And let's have a first look at what happened in gold. So gold experienced a nice rebound yesterday, finally exiting this bearish channel and avoiding some bearish hedger shortest pattern, which is technically a negative signal of a bearish trend reversal. So this doesn't look to be the case now. Nevertheless, the price could have marked a new higher high in the very short-term picture, still below its June's highs. And it seems that it's trading within this neutral triangle. So some questions might stay in place in the coming cut sessions, especially as the stochastic oscillator over here is already near its 80 overmoted levels. So despite the rise in the RSI and the slight improvement in the MACD, we can't entirely exclude downside corrections. Perhaps a move above this triangle and beyond the 50% economic tradesman on this down, like at 2368, to where the price peaked back in June, could help the price to continue higher and towards the 61.8% economic unemployment rate of 2387. Above that, the next resistance could emerge near this broken dash, the ascending trend line coming from February 2023. This has 2,400.5% and higher than that, while market sentiment could further improve, likely bringing the record high of 2449 registered back in May back into view. Now, what could worsen market sentiment to perhaps a downside correction below this triangle and back within this bearish channel currently, and probably below the 23.6% immunology of 2324 could weaken market sentiment, likely drawing the price down to the 2,285 and 2296 support region. A break below that would bring this head-shoulders pattern back into view, likely causing another downfall towards 2265, while lower than that. I believe that the 2200 for the region could also help the price to rebound. Otherwise, the next stop could be at the lower band of this bearish channel and near the 2210 level. Now, looking at a pound dollar, it's an election day in the UK today. The British pound experienced a nice rebound yesterday, but despite this bullish action, the pair couldn't surpass this resistance trend line from May 2021. Once again, that line is at 1.2770, so we still need to close above that region in order to become more confident that this rebound will continue. If you look at the technical indicators, while the RSI is above its 50 neutral mark, the RSI keeps looking upward, so the risk is still to the upside. But the pair will have to surpass the 1.2770 number in order to accelerate towards the 21.2825 region, where the price posed the bike in March. It also could have surpassed that region back in June, so that territory might attract attention as yet of the 1.2859 level, which was the peak of June. Now, if the rally continues beyond this territory and above this broken support trend line, while the focus will turn to the 8-month high, 1.2892 registered back in March. Higher than that, I believe that the next talk will be near 1.2 at around the former constraints on 1.2940. Now, if the price pulls lower, if it fails to rise above 1.2770, while the price could retest its 20 and 50-day exponential moving averages currently at 1.2692 and 1.2670 respectively, below that, the 30.2% improvement of this applet could also provide some support around 1.2645 before all the attention turns to the 200 exponential moving average at 1.26. As like more than that, I believe that this ascending trend line coming from the lows of 2022 will be another important region to watch near 1.2570. And finally, looking at a year dollar. While a year dollar is currently trying to rise above, it's a simple moving average. The price failed to start past that line despite the spike to 1.0815 yesterday. Well, if we look at the technical indicators, there's potential for more upside, the rise in the RSI, the improvement in the MACD, and the fact that the statistics are rising up, or these such as bullish bias. So if the price successfully overcomes the 200 simple moving average, currently seeing at 1.0793, we may see another impressive rally up to the 1.0870, 1.0885 constraining zone, a break of which could take us. Could see an advance up to the 1.0950, 1.0975 region. If we use the Fibonacci tools, the Fibonacci tracement of this applet, you'll see that the 23.6% Fibonacci level is within this region. So that could end also close to this tentative resistance trend line from July 2023. So that could be a critical turn to watch on the upside. Now, if negative pressures return driving the price below the 50-day moving average at 1.07778, then the focus will turn to the 20-day moving average at 1.0735. Below that, the 61.8% Fibonacci level of 1.0707 might attract special attention given that this falling line from December 2023, so also place here. While below that, the support trend line coming from October 2023 could be important to watch. Even the significant upside reversal that took place around this trend line back in April. So that's everything I wanted to share with you guys today. Thank you for watching. Can see you next time. Have a good trading day.